Hello, it's Rob Smith here, and this is just a brief review of expiration and going into what could be a very, very important time in the market. So let's get to it. I got a lot to talk about and a short amount of time to do it. So here's the VIX, still at 32. We are gapping down significantly here. It's Monday morning, and that was to be expected once we get through here. But one thing I want to be very clear about, one of the many things I want to be clear about is when you have a VIX this high, basically you're usually looking to sell premium and options. And however, there's reason to believe this could go a lot higher, and I'm going to get to that in a second. However, what this represents is very high option premium. And so what you want to do around expiration time is look for stocks that might be volatile but have been quiet recently or are giving strong signals, so you can trade them around expiration. This premium comes down a lot as options are about to expire, yet because we have a 30 VIX, volatility is still very much alive. So good job on our part. And on Friday, Thursday, take a look here. Price line, absolutely gorgeous. And here you can see the resistance level at 550. The inside day, about the 540 level. Short, with just 2 days to go, option premium was at near its lows, and boom. We also caught Baidu. Series of lower highs, inside bar, and at this point, right around the 138, and the 130s were trading 25 cents when that broke. If we also look at the weekly, had the weekly trend line broken, come up, test that break, inside week, so we had more evidence than just the day, and I'm going to get to some of that in a bit. But that's what I'm talking about. When you have a really high VIX, option premium is very high, but as you get closer to expiration, it shrinks because they're about to expire, and you really need to take advantage of this as long as we have the VIX this high. Anyway, let's get to the market conditions. Here's S&P Spider, and you may recall that even myself was looking at something potentially like this. And at that point, the market looked great. It looked like a continuation pennant triangle here off of this hammer. And indeed, we had one solid day, but the follow-through wasn't there. And one of the main problems, and this is very important when we're talking about technical analysis, is that a lot of people saw this consolidation. And the more people that see a technical pattern, the less likely it is to work. Reason being, the more people that see it, the faster the trade becomes crowded. So if people see this, they naturally tend to want to get long. But this is not the pattern we're looking at. That's the problem. What we know is that we're in a triangle environment, and I'll get to that for those who aren't as aware. So if we go like this, we're actually looking at the inverted triangle pattern. Not good. If we look at the weekly chart, here you can see that the inverted triangle pattern, going back to when it called the flash crash highs, flash crash lows, extended up to the recent highs, then the drop. So the important part here is apex is the important part of the triangle. We want to play off the other sides, but the apex is showing what direction the triangle is attempting to do. So off this latest bounce of the SPY, we got back up to the apex and went inside week, and then broke below the previous week's lows last week. That's not good. So now you can see potentially these lines and the lines off the lows potentially making another triangle with an apex way down here around 116. Even more frightening is the much larger triangle, and I'll get to that. That becomes clearer in the Dow. Let's go to the Dow Jones real quick. Here you can see the present triangle, and the apex right around this 11.7 area. The potential of this other triangle here, apex maybe around 11.2, but below that, Looking about 10.2 if we go back to the bottom of the triangle. If we go to the monthly charts, I want to go back to the SPY real quick. You can see the large triangle we're still in, going back to the 90s. And we're starting to break. You see this 122, I've talked about it many times, just about the apex of this triangle. And this is the monthly, which means we're getting ready to pick a big direction here. High the flash crash, lows of 05, highs of 03. And you can see the importance of this 122. Going back to the weekly, if I shrink this down a little bit, sorry, I got to make that a little bigger so you can see the importance of yet another apex. Here's the triangle that formed in 2009. It's still valid because it called the recent highs, as well as the apex of the original area, right just above the 110 area, provided support earlier this year. This is potentially bad if we come down and take this out, because not only do we have this potential triangle here where we test the 105, but if the larger triangle here is still involved, we're looking at the low 90s for the SPY. Not saying that's going to happen, but it's something you definitely need to pay attention to. And if we look at this high VIX, we can see more triangles here. For those of you who've been with me for a long time, you recall this triangle here called the flash crash, combined with the SPY and diamond triangles. The VIX here exploded here. Then you can see here new highs, new lows, more triangle here. This helped call at least the test of the 45 area I talked about. Now we've done that. So the problem here is, you can see in here, if I go back to the daily, new highs, new lows. This is where I suggested buying VIX puts, and it was an explosive move to the downside, but it couldn't hold. So if we got new highs, new lows, the problem then comes breaking the 3750. We'd go into new highs and potentially form this triangle here, which might be a continuation up. So here, that would be at least a test of these. But if you look at the weekly, it could be much, much worse. Here's the weekly. And if this triangle here is still valid, VIX go back into the 60s. And even worse, if this triangle is still valid, 90 or 100 on the VIX. Obviously, a lot would have to happen, but we'll take a look at that. One of the things that has held this market up is, if you look at Dow theory, that money is still going into the utilities. Utilities have not backed off. However, this is your XLU, but if you look at this weekly, you can see this triangle. This needs to hold up around 34, 33 area. If it starts breaking down, that means that money is coming out of the market. What the utilities were telling us, that money needs to go somewhere, and they're going for high yield. If they start selling this, that means money is completely coming out of the market. And we'll have to keep an eye on that for sure. Some of the more disturbing triangles, or things to definitely keep an eye on, is last week we saw the NASDAQ being very weak comparatively. However, overall it's held up better. Oftentimes this is the QQQ. Oftentimes signals become a lot clearer in inverse funds because they're a little bit more volatile. So if we look at the QID, the inverse NASDAQ, here you can see this potential triangle where we're just still at the bottom. Remember, this is inverse, which means a rally towards here would mean significant losses for the NASDAQ. We also have a triangle in the financials, and this is going to be very important too. XLF. It's a weekly and monthly if you look at here. So the potential is Financials actually absolutely have to retake this and start moving higher if this market has any chance at all. If you look at the weekly here, just about the 1275 level is the recent triangle. Needs to retake this apex if this market's moving higher. This is another one of the problems that changed everything last week. You may recall that we had this rally in the financials, and that was stemmed on Goldman Sachs trading higher after poor earnings. And now it's reversed and is trading lower than when those earnings came out. Same with JP Morgan. We also had inside weeks breaking to the downside, which means there was an equilibrium buying and selling, and the sellers retook these stocks. PNC is still an inside week, but we're gapping lower. And so something like this, we're looking for any bastions of strength if PNC can maintain this triangle and get back up there. So far we don't see that, but we're going to keep an eye on stuff like that. If there is any hope in the Dow stocks, Cat Tractor was 2 inside weeks, traded above and came in, but did not stop out by taking out these yet. If they do, it's a problem. Here's Boeing. I'm trying to look for any bastions of strength. Here, Boeing is an inside week, closed above it. Potentially okay if they can move higher. Problem with looking at Cat is that these triangles that we know exist, if you look at the daily, here is a potential really dangerous situation. Inside day to start the week for Cat Tractor. So as we look for inside weeks, stocks that closed completely within last week's range, couldn't go to a new low as the market was dropping, for potential turnaround if there's going to be one. And we see that in the gaming stocks, Wynn Resorts, inside week, LVS, MGM, inside weeks, but you can see the potential of these triangles. Absolutely need to take these out to the upside, or there's going to be potentially a lot of pain here. Inside week MGM. In retail, Kohl's stores, inside week and inside days. These are both inside weeks and inside days. Here you can see the channel. If it breaks this inside day, you could take that out. That's a concern. Dillard's department store, another one. Inside day, inside week, already starting to break. And you may recall this from the monthly triangle. If we look at energy, ExxonMobil, also inside week and an inside day to start the week. Also COG and RRC. So those are things that absolutely need to try and turn higher. In the Dow, we also have Disney, inside day, inside week, Johnson & Johnson, stuff like that. You know, one of the problems that we're also going to have here, potentially, coming into this week, all right, obviously we're dealing with potentially a breakdown of this triangle, very dangerous area. But we have a holiday week, which can mean things can dry up as people try to go on vacation. If you've been in Chicago and around the exchange, you hear the chatter that of what this MF Global fallout could be. A lot of traders are shut out of their accounts. This could suggest that we might see even less liquidity going forward. Proprietary traders have been forced to take the Series 56 exam, and depending on how that has gone, that's also a potential lack of liquidity. We also have a flat to down year coming into the final month, which means if you're a fund manager, you almost want this market to go down. You don't have to chase performance coming into the end of the year because the market is flat or down. If we were up 5 or 6%, we might have a shot at seeing this fund money come in, but we don't. This is another potential lack of liquidity. They don't want to support the market. If it goes down, it's a down year, and they can defend that. Don't have to chase. So there's a lot of things going on here to keep an eye on. I could talk all day, but I want to try and get this out before the opening. One more group of names to look at is when I talk about the inside week, like Cat Tractor. What that represents is buying and selling equilibrium. Couldn't take two new lows, couldn't take two new highs. So at that point, and I talk about this often, it's much like being at a playground fight where one side pushes and the other side pushes back harder. So when one side fails to break out, let's say here in CAT, the buyers try to take the stock, but it drops back in. If that fails and give us a counter sell signal, it can be stronger, like that second push on the playground. So we call that the reversal strategy. So if you look on the weeklies, you can see something like Agilent, letter A, also going to be related to technology in the NASDAQ. Inside week, tries to go to new highs, forms a shooting star within the range. It takes that out. The buyers failed to take it. Sellers can now take it and push below last week. Also see that in Acme Packet. APKT, inside week, fails to go up, comes back in. We see this in John Deere. We saw more technology, TIBX. T-Leo. And so, I'd say Riverbed. So there's a lot of stuff to look out for. I'd be very careful going forward. Keep an eye on the VIX. Watch these key levels, the 122 SPY, the 11.7 Dow, and mind these triangles. They are serious. I'm Rob Smith. Everybody have a great week. Talk to you soon.